What's up traders, it's XViper TV and welcome back. If you ever felt like you were just guessing, entering late, chasing price, or watch your trades go the wrong way seconds after you click buy, it's probably because you're not using structure and data to guide your trades. Today I'm going to show you how to combine three powerful tools: initial balance, VWAP with standard deviation bands, and volume profile, to build a simple, reliable framework that helps you better time your entries and spot key decision zones. Even if you've never used them before, don't worry. I'll walk you through how each one works and how to use them together like a pro. Now, before we get started, this information is for educational purposes only. I am not a financial advisor, and you should definitely trade at your own risk. Now, why do we combine these tools? Individually, each tool is powerful, but together they create confluence and clarity. Initial balance, IB, outlines early market intent. VWAP shows the average price of value, where institutions are active. Standard deviation bands reveal volatility and overextension zones. Volume profile highlights where the market actually wants to do business. When all three line up, you're no longer reacting, you're anticipating. Now we're going to go into how to build the framework on your chart. Step 1, draw your initial balance range. Mark the high and the low of the opening range. This becomes your base structure for the day. Step 2, apply VWAP with standard deviation bands. Add VWAP and enable +1 and +2 standard deviation bands. Inside first band equals balance, between first and second equals trending, and beyond second is overextended or exhaustion zone. Step 3, add the volume profile. Look for key levels: point of control, where the most volume traded, high volume nodes, areas of high interest, price often stalls, and low volume nodes, thin volume, price moves quickly through these zones. Now we're going to go into some trading models that use all three of these tools. Model 1, break and ride the trend. Price breaks above the initial balance and holds above VWAP. Pulls back into VWAP are the first standard deviation band. Point of control or high volume node supports the level. Candlestick signal confirms entry. Target second deviation band or opposite side of the IB range. Model 2, trap and reverse. Price spikes outside the IB into the second standard deviation band, hits a low volume node, then quickly rejects, closes back inside the IB range. Entry, confirm with bearish candle or change of character. Target, VWAP or opposite side of the IB. Model 3, mean reversion fade. Price trades outside first band but loses steam. Volume shows rejection. VWAP is still in control. Fade trade back into VWAP with confirmation. Only valid in balance or non-trending conditions. Now here's some tips for better confluence. If VWAP is flat and IB is unbroken, then skip the trade. The second deviation band often acts as an extreme level. Only trade it with confirmation. Confluence is king. When VWAP, a volume node, and the IB all line up, you've gotten a high probability setup. Now let's do a quick recap checklist. Draw the initial balance range, add VWAP and standard deviation bands, add the volume profile, wait for confluence, confirm with price action, and manage your risk with smart stop placement. Now in the next video, we're diving into liquidity grabs and stop hunts, what they are and how to spot them, and how to use them to enter where most traders get faked out. Now if this video helped you level up your trade entries, hit that like button and drop a comment. What's your favorite confluence setup? And subscribe so you don't miss what's coming next. This is XViper TV. Thanks for watching and happy trading.